I'm here today with the MaxFi Tech team, which is currently number one in the, what did you say, liquidity
We're the number
providers?
one. We're the number one liquidity provider in all of crypto. Number one, beyond BFI, VFAT, all the liquidity managers. We beat them all.
That's pretty amazing because you guys are pretty new at MaxFi Tech and Snuggle.fi. You've made a way to get everything more efficient with liquidity to pay out your users more, and people are making a lot of money on this. So I appreciate you sponsoring this video. Anybody that wants to try this, I'll have a referral link in the description. And tell us like so the average person doesn't even know about liquidity providing probably, and is like me just sitting there taking like 6% on ICP or less than that on an exchange or something. Like for the basic person who doesn't know anything, what is liquidity providing, and how are you generating this money you're making? And then for the more advanced person after that, like what are you doing different that everybody else isn't doing?
Did you want to handle that, Alex?
Yeah, so for those who don't know what liquidity provisioning or liquidity farming is, it's basically becoming a market maker for crypto assets, tokens on blockchains like Base Chain and now Robinhood Chain. Um, and what we do is we facilitate the swaps between these tokens. We allow people to buy or sell different assets on the blockchain. And this has been around since 2017, back in the Bancor days, and then 2018, Uniswap came out with their liquidity systems on their decentralized exchanges. So, from a user perspective, a decentralized exchange allows anybody in the world to be a liquidity provider. They can take their assets and put them in a liquidity pool and facilitate those trades back and forth, and they earn a small commission called a swap fee every time someone buys or sells in their liquidity pool. So let's say you're on Base Chain and you want to sell your ICP for USDC, one of the biggest stable coins. You want to take your profits because let's say ICP just pumped 20x, you guys, right? When you sell your ICP to take your profits and you swap it for USDC on Base Chain, for instance, all the liquidity providers, many of them on MaxFi, will earn a small, tiny swap fee from the decentralized exchange Uniswap. So the fees are generated by the DEXs, the decentralized exchanges like Uniswap, and they get passed on to the liquidity providers like us. Now, with concentrated liquidity positions, which has been around since 2021, Uniswap came out with this, and everybody's doing it now. It's a more capital efficient way to earn more as a liquidity provider. You can take your liquidity and instead of providing it across the full range of the price spectrum, you can concentrate it to a smaller trading range. Let's say 10% of the price, where the price is currently, is if it's trading in there, let's say you've concentrated your liquidity 10x and you earn 10x the fees doing it that way. Now, there are some problems associated inherently, intrinsically, with concentrated
All right,
liquidity
let me
position
just
management.
stop the for people that are still like, what does he mean by liquidity? Like it means, so
Yeah,
I have ICP, and then if I have USDC, like those are liquid crypto that I could do anything with. And with
right.
liquidity providing, you're like, if you use, MaxFi.tech, you are giving, you put your ICP or your USDC or your Ether, whatever you got, you put that into the liquidity pool, and then you're providing the liquidity so that when other people come with one coin and they want to swap to another coin, they're using you're essentially providing the coin they're going to swap into, and you're essentially taking the coin they're swapping. So that's then when you click on swap, like in MetaMask, you see the fees that are generated. So for you guys that are like total noobs, liquidity is just you're taking your crypto and then you're providing it to a protocol like MaxFi.tech, and then they've got the liquidity and they swap it for you with people that are swapping on decentralized exchanges, and then you get a part of the fees, and then
Yeah.
that's the basics. All right,
That
so
is.
what how are you able, you seem to have something pretty unique set up here that you're generating a lot of fees with 8 million TVL. Your TVL has grown like crazy lately, but it's still
Yeah.
much smaller than a lot of the bigger ones, and yet you're generating more fees. So for the more advanced people, like, how are you doing that? What did you do?
So it's because of capital efficiency. And some of those intrinsic issues with concentrated liquidity position management, we solved with Snuggle rebalancing technology. I've been teaching Snuggle rebalancing. It's a technique to rebalance your liquidity position when the price goes out of your range. Traditionally, you would swap half your tokens for the other half, and boom, you're back in range earning fees again. But when you do that, you take on a bunch of hidden costs. The swap fee itself, you pay it to the other liquidity providers when you do that. Slippage, price impact, and MEV extraction on that swap itself. And then the big elephant in the room, realized impermanent loss across rebalances, which are about 50% higher when you do a traditional rebalance compared to a snuggle rebalance. And a snuggle rebalance is a no swap rebalancing technique that has been taught for years in private investor groups like the Underdog Investor Group, where I've been a coach for the last 2, 3 years, teaching people how to do this that have 6, 7 figure portfolios. And when they would rebalance before they learned this technique, they would be paying $10,000 at a time just to get back into range earning fees again.
That's
And
horrible.
it's crazy. So, like, let's say you've got $1 million in a liquidity pool and you have to pay a 0.3% swap fee. Then you get hit with a lot of slippage, price impact, and MEV extraction on a swap that big. It could cost you 10,000, maybe more dollars every rebalance event. And if you're doing this on an automated platform, they often charge a protocol fee on top of that on the principal of your position, not on the performance, not on the fees, but on the principal. So it cannibalizes your principal very quickly doing it this way. And there's a much better, more capital efficient way to do that, which is called snuggle rebalancing. And I taught these people, and I've been doing this for my own portfolio for years. Um, I I've been doing this manually, and it would take about 10, 20 hours a week to
God.
manage a handful of liquidity positions this way. And it was worth it. The money's great. It's for it's like the best way to generate passive income. But when you're doing it manually, like 10 to 20 hours isn't so passive, right? And what I did was I automated this snuggle rebalancing technique on the blockchain, and I added in a rebalance delay plus 50/50 auto compounding, where half of the tokens get compounded back into the position and the other half gets sent to your wallet passively. And this all runs on autopilot, and we cover all the gas costs for all the rebalances. So you
Nice.
can set up your liquidity positions and just let them go. And then you just check in on them and see how much money did I make today. Just look in your wallet. And we have people now using this with hundreds of positions, which was impossible to do before on autopilot like this. And it's doing it in the most capital efficient way that removes all those hidden costs and drastically reduces realized and permanent loss across rebalances. And as Aaron always says, capital flows to the most capital efficient systems. So as soon as people caught wind of this, money just started flowing into our system. And as they're using this, they're able to concentrate their ranges tighter because they can sustain more rebalances than
Right.
anywhere else. And because of that, they're generating higher fees. They're concentrating tighter, generating crazy amounts of fees, dollar per dollar of TVL that they put in the pool. If they were doing this on another system or on the DEX itself, they couldn't get these same numbers. And that's why for $8 million at TVL now, our users are earning more fees cumulatively than older traditional systems that have over $100 million in them.
Jeez.
Yeah. And Aaron, do you want to talk about some of the numbers? I know you were just calculating them.
Well, it's crazy. I was actually running them last night. So we've made our users $383,000 in the last 7 days. Yesterday was our biggest day, about $95,000 in fees given back to the community. That's another reason our TVL is also growing, because people are making so much money. They're just throwing and opening up new pairs, making more money. They're compounding their wealth.
Yeah.
So that's another impact. We have $383,000 coming into the system in 1 week is insane. And
Yeah,
then
especially with 8 million TVL locked, that's just like a little under 5% of your whole TVL in fees in a
it's
week.
it's crazy.
It's
It's
crazy.
a crazy number, and a lot of people do take it out. I know Blockchain Pill. He took out like $800. We know another guy who's on a vacation in the Mediterranean. He said MaxFi paid for it. There was a bunch of other people who are saying this is replacing their salaries now. They're gonna try to find something they really like to do instead of a job. So, so it's definitely revolutionary. But if you compare us to Beefy did $199,000 last week. I mean, this week also in the last 7 days, and they did that on over $113 million. When I
Jeez.
ran the numbers, it said we are 14 times more capital efficient than Beefy, and part of that is not. I think part of it is me and Alex also educating people because we have a YouTube channel that's called Passive Income Labs, where we actually educate you. We show you the pairs to go into. So like we show you where the money is. Like, and also what Alex has done, he's using an AI agent called Agent Max, where it goes and it finds the best pools. And we tell the community, go here, go there. These are the best places you can earn the most yields. And by doing this, telling people the ranges, giving the data, no one has done this. And we're able to do this because of the way the Snuggle rebalancing works. So it's absolutely, I would say what Alex has done is he's revolutionized the LP space, and he's made it so that everyday people can now become market makers and become very, very profitable.
You're saying in the way the space normally works, people just show up with their money and kind of throw into different positions, don't know what they're doing.
Good
Then
luck.
they don't make that many fees. They have impermanent loss. And what you're doing is you've got a more efficient rebalancing system, and you've got assets you've got all different kinds of pools and
Yeah.
pairs. And then on top of that, you're showing your users, hey, these are the ones where there's opportunities. Because yeah, it's like so many things in life, if you pick the right pools with the right pair of
Yeah.
coins, then you're in a position to make lots of money if you're in the right pool.
Well, what Alex also did was he made something called cover value, which wasn't available before he invented it. What cover value is you can go into a certain pool and you know the fees will cover any impermanent loss. And the cover value can be a 3x, a 5x, a 10x, a 6x. So higher the cover value, more of the impermanent loss you cover. No one had this data before. No one was providing this data. No one has this data. Alex had to invent this data because he was teaching this. So that has also added another layer. And then pretty soon our agent Max is going to have all this data listed. And then you can literally go to the website and click the positions you want. And then Agent Max has already the position open with the rate, and you can click it, one click, and boom, it's open for you. And we have another solution coming in a few weeks, which will make it even easier. So we're actually trying to make liquidity provisioning so easy for people that they don't even need to know anything. The data and the homework is being done by our AI agent.
Well, my thought is, why aren't other people doing more of this? Like all the places I've done liquidity, it was difficult. There was like no guidance, and the fees. Like the best you could do is look at the top performing pools and try and pick them, but you would miss the smaller opportunities doing that.
You know what? I had the same problem. I stopped liquidity providing last year because I got wrecked on a couple ones on Aerodrome, and it didn't make sense, and I got wrecked on it. Even though I made a lot of money on like the blue chip ones, like BNB ETH, BTC ETH, I've done great on over the years, done 4 or 5x's on them. But when you get to the smaller ones, they become really complicated. And unless you have the right system, I realized, and the right data, you have to have the data. You just got it's not worth it. And that's the biggest problem. No one's providing the data. Why, Jerry? No one's providing the data? I don't know. Alex, it's weird to me too.
So there are a few things.
Okay.
This is first off the crypto space. For whatever reason, a lot of people don't like to show their face out here. And I think like it just takes a certain level of conviction and bravery to even get on camera and teach people, which so I commend both of you for doing this for years. in this space where there are so many trolls and all these people, and when money's involved, a lot of stuff can happen. So I think these other systems, they just they don't want to get on camera and teach.
Mm,
And I think people are hungry for this education. There are a couple people out here doing it, and have been for a while, like Lucas Rubix at Crypto Labs Research YouTube channel. He created the Underdog Investor Group where I've been teaching this stuff for years with a bunch of other high-level coaches. And like we've got this stuff down to a science. And a lot of the people with a lot of money, they they find these groups and go in there and make the most amount of money as liquidity providers. It's kind of actually a small circle. I think Aaron did a video showing there's only 20 or 30,000 people in the
it's really
entire
small.
world. I shouldn't even say that, 20 or 30,000 unique wallets in the world doing this. So probably 15, 20,000 people actually liquidity farming at a high level with sophisticated strategies and tools. That's not a lot of people when you look at the whole grand scheme of the crypto space, the entire world. We're so early to this space, and the returns are so outsized because of this, especially as the rest of the world wants to get into crypto, and all they know how to do is click buy and click sell. Guess who earns every time they do that? We do. The liquidity providers. We are literally making these markets for these people for this to be possible. And now with MaxFi and Snuggle, we're democratizing market making for the everyday retail investor and user. So normal everyday people like you, me, Aaron, and all of our community members, all of our audience members, we can come in with $100, put it in our favorite liquidity pool on assets we already own and have conviction in. And with a system like MaxFi or Snuggle, it's so capital efficient, and it preserves your principal so well from those hidden costs and the impermanent loss that it's very forgiving. Even if you don't know what you're doing and you just blindly YOLO $100 into a position, you're probably going to be all right. But then you go and you watch some of our videos. You do a little bit of research. Now you're very sophisticated compared to the rest of the people doing this with the most advanced tool that's on the market right now. And now your performance is extreme. Then you go into our Discord server, the MaxFi Discord, where we have people who are brilliant. We have genius community members who are taking this technology and applying it in ways I never even thought possible. For instance, Cryptolo, this guy's a genius. He took a $200 position, and in the last 30 days, he has made over $2,200 on it. And
It's
it is
2,800 now.
he has made $2,800 on it in the last month on $200, and it is still going, printing every single day for him. And he's teaching his audience now how to do this and the people in the MaxFi community. And there are a lot of people like him at his skill level that are sharing their results, their positions, their exact strategies, their favorite pairs. They're saying, here's where the money's at right now, guys. Go in with these settings and you can ladder it. You can do a Russian doll strategy. You don't have to go just one range. Take $300, put $100 tight, $100 moderate, $100 conservative, and just pick some random rebalance delays and just let them run for a few weeks and see what happens. Whichever one's doing best and you like the most, scale into that one. There's so many ways you can do this in a very forgiving way. And it's not like day trading or leverage trading where like you make one wrong move and you blow up your account overnight. Especially on these blue chips, you can be it moves kind of slow. Like you're just watching this slow moving thing, you're watching your position, and it's just the fees are just stacking up. And if something seems off with the position, you just adjust it slightly and you're like, there we go. And you find those sweet spots and you optimize as you go. So liquidity farming is very forgiving compared to something like trying to trade, day trade, swing trade, or leverage trade, or gamble on perpetuals markets, options
Poly market.
trading,
Yeah.
poly market. Like that stuff is extremely degenerate, in my opinion. And unless you're like a really advanced fintech or finance bro person, and you're using like a put option to hedge a portfolio strategically. I'm not talking about that. Most people are out here buying call options on GameStop, hoping they're the next, millionaire, but then they lose it all 6 weeks later. This way, it's like put a few $100 in here and just watch it make a third of a percent per day, half of a percent per day, 1% per day. We're seeing crazy numbers. On some of these meme coins on Robinhood Chain right now, people are doing 5 to 10% per day or more. And every day that they earn those fees, it de-risks them from the exposure to that meme coin. And in like 12, 14 days, they've completely gotten their initial back out. Now they're on house money. They took the initial that they took out, put that into blue chips, and then they just let this meme coin free money printer just run on house money, and it just gives them passive income until however long that meme coin lives. There are so many ways you can play this. Personally, I'm mostly in blue chips. Bitcoin ETH, Solana ETH. Now I'm in ICP slash ETH because of you guys. Thank you. And I built out the infrastructure on chain over the last few nights in preparation to meet you, Jerry, because I know you have a lot of ICP bulls in your community. So the base chain infrastructure for the ICP token, there's a wrapped ICP token on base chain. And the infrastructure was lacking there as far as liquidity. So I built out all the V3 infrastructure on Uniswap that was necessary to unlock capital efficient trading of ICP between USDC stablecoins as well as ETH. And now that's available on MaxFi. So if you've got ICP, you can go right on MaxFi and pair it with wrapped ETH or USDC and start earning yield right now. And I'm doing between 50 and 150% APR on my ICP positions as we speak. It's really cool. Thanks, guys. I'm an ICP bull now.
Nice.
Yeah. Do you want to see my positions?
Well, let me ask first. So this sounds almost too easy. Like you go on and show up and pick some positions, put some money in and make money. Like what are some of the risks people should be aware of beforehand? And what are some of the like favorable versus unfavorable times to be doing this? Like, is this bad if it's in a bear market and things are going down? Or, are you missing out on gains if it's in a bull market and things are pumping? Like, what are the things people should know that, potentially they wouldn't want to find out the hard way, or just like be aware of consciously, like, okay, these are the risks I should know about?
You're still exposed to the underlying assets. So if ICP goes down in price, your LP value will go down in price if you're holding ICP in a liquidity pool. So it's the same risk exposure there. You're already holding these assets, so you already know that risk. If ICP goes down 10%, well, your LP position will go down in dollar terms 10%. Now, if you're paired with something like wrapped ETH and they both come back up 10%, your LP value comes back up 10%. So you kind of track the market. But if you're not a crypto bro like us and you're not used to those swings, and all of a sudden the crypto market dumps on us 20% over a week, like that can be unsettling for normal people who aren't used to crypto yet. So it's the same crypto roller coaster, except now we have tokenized stocks on Robinhood Chain. So we have an uncorrelated asset class where now you can diversify your exposure to these assets with stocks, equities, ETFs, gold and silver, and bonds. And we also have Forex pairs. So you can really like pick the assets that you want to have your risk exposure to and put together an LP portfolio with a bunch of uncorrelated assets. So if the crypto market's going down one day, but the stock market's going up that day, your stock positions are ripping, your crypto positions are dipping, and everything's okay. Either way, you're earning fees all along the way. So that's your main risk exposure is to you're still holding the underlying assets at the end of the day. So know what you're holding. And then the second one is realized impermanent loss across rebalances. If you go super degenerate and do like a 0.5% wide range with a 1 hour rebalance delay and it's just chopping you up, that could be bad. Don't do that. Go wide and let it ride at first if you're new to this. And just see how it works with a super wide range, a long rebalance delay. It's a very slow moving beast. You'll have very little impermanent loss realized that way. And your fees are probably going to out earn whatever small amount of impermanent loss you have because we use Snuggle rebalancing to protect and preserve your principal as much as possible. But impermanent loss is still a thing. So learn about that on our learn section and start out wide and slow. And then as you get good and you really understand how this stuff works, then you can optimize, tighten things up, find those sweet spots where you're maximizing fees while still minimizing impermanent loss. And there's that sweet spot where you have that highest cover value that Aaron was talking about. Those are the two main risks associated with liquidity farming.
So basically, if you pick like some meme coin and then paired with some other meme coin, for example, that might be a riskier environment where both of them
Yeah.
could go down and you could
Yeah.
basically lose your money.
Oh
But if you
yeah.
pick like the right meme coin with something else, you could be printing money basically. Then if it sounds like there's all kinds of random pairs too. Like you could pair some random meme coin with gold, for example. And if like nobody else is providing liquidity there, then you're in a position to earn and make some great fees if people start swapping there. So it sounds
Yeah.
like there's a lot of opportunities, but you got to really pick you got to choose which assets you want to be in because you're still taking the risk with those assets also. And if you
Yeah.
pick assets you enjoy or that you stand behind, you're taking the same risk as usual, but you're earning fees and you could potentially, even if the price goes down, you might make enough in fees to cover the price going down. Then when it goes up, you'll make the price going up plus the fees.
Exactly. And a pro tip, a way you can really minimize impermanent loss is pick correlated pairs, assets that move together, because the impermanent loss only
Hmm.
happens on their
When
divergences.
one shifts from another.
Exactly. So Bitcoin and ETH pretty well correlated. Solana and ETH very correlated. Aaron identified that MicroStrategy
Man,
paired
money
with ETH,
printer,
money
money
printer,
printer,
and
money.
it's super correlated. So you could go tight, and it just, dude, you're making like 2-3% per day on that one.
No, it's about 1%. It's about 200 to 300% APR. But then, yeah, I see some days it just jumps like crazy. Like today, I think it jumped. It kicked me. The great thing with a correlated pair is a couple of my positions went out of range today. So I got my ETH got, and also this is a great thing with our system. I got kicked into MSTR. So MSTR is basically a Bitcoin proxy, right? It's basically correlated with Bitcoin. So all of a sudden, my positions, and I have a lot of MSTR ETH. A lot of my positions got thrown into MSTR, but MSTR was still going up. So it's not like I stopped going up in price. I was
Yeah.
still, as Bitcoin was going up, my MSTR was going up. And then eventually it actually just came back into range without me even doing anything. No rebalance, no nothing, because ETH started to come back down and MSTR went back up. And they both met in the middle like little lovebirds. And I continue to print for the rest of the today. It looks like that's what happened. And
How
I'm
how
printing.
long is your rebalance delay for that you set to allow that to happen?
I have like a 4 hour
Yeah.
rebalance delay. This happened within like a 2 hour period. So the rebalance delay that we have on the system is absolutely a game changer too. A lot of people want to always be printing money. They're always like, I want to always be printing. I always want to be in range. Well, this is a good thing that he built this into the system because you actually save money by not being in range because it helps you stave off all the impermanent loss and all the kind of the problems that liquidity farmers have had in the past.
Short-term price wicks that revert to the mean in just a couple hours or even in a day or two, you can spot that on the chart and say, hey, a 4 hour, an 8 hour, maybe a 24-hour delay would completely filter out that noise and all of those unnecessary rebalances, and I will lock in zero impermanent loss when the price comes back into my range and I'm earning again. So you could be very strategic about it. Also, that gold and silver pair that I created the other day, it didn't exist. We built out the gold and silver markets entirely on Robinhood Chain over the past few weeks, and I finally it all led up to this plan I've had to have a gold and silver pair. It's the ultimate, it's the holy grail of correlated pairs, in my opinion. I know we've said that about
Man,
Solana and ETH, but man, gold and silver are so correlated, and it's so and as an asset class, it's so uncorrelated from crypto and stocks that you can now have Bitcoin and ETH moving together printing. You can now have SPY and QQQ, the ETFs printing together, and now you have gold and silver paired together printing, and those three uncorrelated things, but they're correlated in their own sector. It's just like you're always printing and you're minimizing a permanent loss while you have exposure across all of these asset classes. This was never possible in finance before. This is a revolution in finance.
yeah.
And thank you to Robinhood Chain for their RWA, their real world asset infrastructure that they've brought to us. And now we're further building out what they've laid the groundwork for. And then we're applying our extremely capital efficient liquidity management system to it. And the results are just spectacular. They're explosive. And our users are literally printing money hand over fist on Robinhood Chain right now. Like Cryptolo with the meme coin. Thinking Cat is that meme coin he picked. It's called HMM paired with Wrapped ETH. It's the most silly thing. It's a picture of a cat. No intrinsic value, right? He turned 200 bucks into 2200, 2800, sorry, and it's still going with the meme coins. I wanted to mention this, Jerry. Don't YOLO everything you got into one meme coin. All right. Not financial advice,
Split it
but
up.
like, hear me out. Split it up. Pick like the 5 or 10 strongest meme coins on the chain and put like 100 bucks in each one instead of 1,000 all into one of them. And then if one of them nukes on you, you barely feel it, and all the others keep printing. And if they start ROIing on themselves and you're on house money on half of them, you don't actually care what happens at that point. Now you've just got a giant printing press across all of these meme coins. So that's the way you can further diversify yourself. Um, anyway, did all that make sense?
Yes. Yeah,
Okay,
that
cool.
makes perfect sense.
And our users are really perfecting these strategies at a portfolio level and
Yeah.
sharing, like, here are my 90 positions in the system right now, guys. Check it out. One guy said in the last 90 days he's made 10 grand in profit, even after factoring out impermanent loss, and said he's making more passively every day from MaxFi than he makes as a lawyer.
Jeez.
And I'm just like thinking, how is this possible that like all of the time and effort I put into building this thing is now out here completely changing lives? And it's just a really cool and satisfying thing to experience as a software developer. By the way, I've been a software engineer for 20 years, and normally I'm working for corporations in windowless cubicles, and they don't really appreciate a lot of the amazing stuff I've built for them and made them millions of dollars over the years, compared to everyday people who are in our community sharing their stories, telling us how this is completely changing their lives and giving them freedom to do things that they didn't have before. And that's super cool.
Amazing.
So if I have like 20 some $1,000 in ICP, if I was even getting like 100% APR on that, I'd be getting like thousands of dollars a month if I had all that in MaxFi.
That's right.
Can I
Eh,
share my ICP positions?
Yeah, share it. Let's see what it looks
All
like.
right. Can you see my screen?
Yep.
Yep.
Yep. Yep.
All right. So I built out the ICP infrastructure over the last few days, and last night I finished completely getting it all set up. And right now, you can trade ICP and ETH and ICP and USDC extremely in an extremely capital efficient way. And I've got 15 active positions across ICP and wrapped ETH and ICP and USDC. And I put about 2,600 bucks in here, and I'm doing about 146% APR. That will fluctuate based on the volume flowing through these pools, based on demand for the trading of ICP, all the arbitrage bots across the networks and the bridges between the different blockchains and everything. So this yield will fluctuate, but like I've got an 8% wide range on ICP and ETH. ICP and ETH are actually kind of correlated. All right. Not as correlated as like Solana and ETH or Bitcoin and ETH, but like they're still correlated. Like crypto pumps, they're going to pump together. So in a position like this, I have upside exposure to both ICP and ETH for when the bull run comes. And this thing is just, this position specifically on the 1% pool is absurd right now. It's been 14 hours and I've already made $1 on $93. That's at a
Jeez.
600% APR. It's like almost 2% per day rate. That'll probably come down, I'm assuming. I don't know. Or maybe not. Like we saw with MSTR and Wrapped ETH, that thing's been going 1,
It's
2,
going.
3% per day for
Yeah.
months, two
Yeah.
months now.
It just
So.
depends. Like even Nvidia today, the APR shut up on Nvidia stock. So it just depends on what's going on because Nvidia had earnings. So if ICP has a big day, when Dom announces something big, most of the time, the price goes up, but so does the volume. So this way you just make a bunch of money and you don't need to sell. You just sit there and reap the rewards.
And this is on base chain, on Uniswap, on MaxFi. And if you want to see some ridiculous stuff, I'll show you. Let me refresh the page. It's loading there. I've got 97 positions, so give it a sec to load. It's a lot of RPC calls to Robinhood Chain. All right, I got about $12,000 in here now. I've earned 5,000 bucks on this in like the last month.
God.
My portfolio yield is 928% right now. My best position is Thinking Cat, this stupid silly meme. I put up like actually I wrote down the numbers here if you guys want to hear.
That's crazy. You've earned $600 on this, and the position's worth $75 or so.
I guess how much I started this position with.
A hundred,
$79.54.
and you
I've
earned
owned
600 in fees. Holy
and
crap!
I've only lost about $5 to impermanent loss across 17 rebalances.
Jeez.
This is unfeasible on any other platform. I dare you to try. Don't do it because I don't want you to lose money. But try it over here where the Snuggle rebalancing is a lot more forgiving, especially on the extremely volatile assets like Thinking Cat, which is just absurd. Martians, Juggernaut. Okay, Juggernaut's one that's been around for 2 months now.
Wow, it's still printing after 2 months.
I opened this position up 9 hours ago with $92. The price of Juggernaut fluctuated slightly, so my position's worth about $90 now. And the position value will go up and down with the price of the assets. But I've earned $8 in 9 hours, $92. At this rate, I mean, this might ROI in a week, and I will collect the fees. I will sell them for stable coins or more ETH or something, a blue chip, and then I will be on house money with this position.
Wait,
And
so like for example, how did you pick wrapped ETH and Juggernaut on Robinhood Chain to like provide liquidity for? And you had to show up with equal parts Juggernaut and wrapped ETH to begin?
correct. So
All right.
I initially for these, I track on-chain activity. I look where the money's going, and I find the flow. And for a lot of these meme coins, the
What do you use
numbers
to track the activity?
you can do it directly on Uniswap. You can use Dex Screener. There are a lot of tools where you can see the volume on a token. And then from there, I go in and I optimize the pool setup for that specific market. And I either add existing pools that are already optimally set up, or I create the optimal setup if it doesn't exist yet. Now, this 1% juggernaut pool, it's it's a juggernaut, honestly. It's been super strong for months. DTF we just added this thing in what is that, 38 hours, earned me $16 on I started this with 112. These meme coins fluctuate big time. They'll go, that's why I have a 400% wide range on this. So I let the price move around in this giant range and it spits out fees and de-risks me every day. Now, some of the more established ones like Juggernaut and Tendies on Robinhood Chain, I started this position with um I think $100. No, no, I have multiple Tendies positions. Anyways, I probably started this with around $70. And this one's earned 260. I have auto compounding enabled, so half of the fees go back into offsetting the impermanent loss when you let auto compounding do its thing. And that's why I can get away with a 20% wide range on something like Tendies, which again, unfeasible anywhere else. This was a crazy test I did. Cash Cat, Alex Blockchain Pill. His Cash Cat position is a monster. He is printing money on Cash Cat, as you guys probably saw. This position, I started it with usually I start these with anywhere between 65 and $75. So this one's still around $72 and it's earned 251 in total. And when the price runs on these assets, I manually collect the fees sometimes and sell them and take profits on it. Index Cryptolo has made a fortune on Index so far. So I started this position with I think 70 or no, $83.62. It's now worth $70, but I've earned 209.
Or can you
It,
explain the compound a little bit more?
yeah, so I built what's called a matching token no swap compounding system. And effectively, over time, it will compound 50% of your earnings and harvest the other 50% automatically to your wallet on every rebalance event.
So where
So,
does it put the compound? Does it put it back into the position value?
yes, and how it does it is let's say when the price moves out of my range this way, I'm fully converted to wrapped ETH right now. Now, when this rebalances in 2 hours, it's going to take any wrapped ETH that I've collected so far and add it to the principal. And it's going to take any of the index tokens, which are much more valuable at the moment, and send those to my wallet. So it forces you to take profits when prices are high. And then when prices are low on the asset, it compounds them back into your position. So then when the price comes back up, you have more of the index token. And then, so it's kind of like a seesaw. It kind of forces you to take profits when prices are high. And then when prices are lower on the asset, it compounds it and it waits for the prices to come back up. And by doing it this way, it's unlocked another level of capital efficiency for liquidity position management, as well as offsetting realized and permanent loss, which not only keeps your positions healthy, but a lot of times allows them to compound and grow.
So I correct in understanding then like on that last position, if you had 200 in that you've earned and 208 collected, does that mean 104 went to your wallet and 104 went back into the position value to keep it where it is?
Kind of. So this example is not pure because when index is running, sometimes, and I've got like 30 bucks sitting here, I will collect the fees and 100% in that case goes back to my wallet. So like if index goes on a tear and I know that a huge pile of index is sitting there ready to harvest, I will just collect all of it and then sell it. So not all of this has been compounded, but you're generally right. If you didn't manually collect the fees, approximately 50% would get compounded and approximately 50% would be sent to your wallet as passive income every time it rebalances. And this kind of helps, like I said, offset that impermanent loss as well as compound the position and then keep the passive income stream going to your wallet. This wrapped ETH AI position, this is one of our big winners lately.
Yeah, that one I have a big position in, and it's already paid off. I put $480 in. I already got $1,200 back on the
Nice.
on this.
Wow.
And it's been the same 13 days as Alex here.
And
So,
I put in $108
oh yeah,
and yeah, I put in $108 and I've
going
already
up.
harvested 52, 70. I've already pulled out manually. I've collected over $82. So $82 of this was not even compounded. Um so maybe $90 divided by 2, so maybe $45 of this has gone back into compounding, which has grown the position. And the rest I've just been taking out because AI's been on a tear. So I'm harvesting it as fast as I can and selling it while the prices are high. There are ways you can micromanage if you're one of those types of people who likes to micromanage, and you can get additional strategic benefit if you want, but it's not necessary. I've built
Yeah,
the system to be so easy that you can set it and forget it. And it basically takes care of everything for you in the most capital efficient way that will constantly pay you passive income for as long as possible. That's my goal. Hands off. I got people out here like me with 97 positions, and this is just on Robinhood Chain. I've got, let's see, on Snuggle, I've got another 11 positions going. I got $45,000 here, and I've earned about 63. This is a much more blue chip, slower moving portfolio. This is not my Robinhood meme coin portfolio, you guys. All right, that's a whole different ball game. But for my long-term portfolio where I kind of this is like my savings account, I'm in like wrapped ETH and Bitcoin. This position has just been going up in value with the market. It's earned over almost 1,100 bucks in 60
yeah,
days. Um,
it's nice.
this is fantastic. And these are correlated pairs. I call these types of positions correlated pair accumulators because what they do is they compound and accumulate half of the fees back into your position, send the other half to your wallet so you could go, pay rent, pay your mortgage, go on a trip around the Mediterranean or whatever you want to do. Or if you're like me, like I don't need the money right away. I'm gonna take the stuff in my wallet and use it to open new positions. So I'm just
Yep.
compounding my entire portfolio that way. Virtual wrapped ETH. This has been a fantastic performer. 12% range. Arrow CBBTC. This is a monster position. People have been loving this position all summer. And I'm very conservative with my ranges and delays. And I use a very sophisticated backtesting system to kind of give me a very conservative or moderate approach where even if the market goes absolutely ballistic, like I'm not going to get wrecked by impermanent loss or anything like that. And over like a 6 month back test, all of these positions and settings have done nothing but grow with a massive cover value where the fees earned far outpaces any realized impermanent loss. So essentially, this is a free token accumulator where I have exposure to the stuff I'd be holding anyway.
So how do you do your back testing?
I have spent hundreds of hours, if not a couple thousand hours now, building out Agent Max. It's the most sophisticated AI LP farming system ever created. There's nothing else like there out, no, nothing else like it out there. And it's not only just back testing, but it's pool discovery, analytics, back testing specific to the Snuggle rebalancing smart contracts used on Snuggle.fi and MaxFi Tech. And then also it does portfolio level strategizing to diversify your risk, make sure your risk to reward ratio is well balanced. So you have your allocations set up wisely according to modern portfolio allocation theory. And that's why I'm heavier in stuff like Bitcoin and ETH, where maybe my APR, my earning rate's 43%, but risk to reward ratio on this is through the roof. So like this is kind of a much safer position than let's say a virtual slash wrapped ETH. Virtual has a higher beta. It's a little more volatile. We don't know what it could do. It could go really volatile at any point in time. Same with like a VVV. It's a newer token. This has been one of the best performers all year, but I really like the token, so I want to have it. And the earning rate has been spectacular. The cover value is still through the roof. Uniswap slash wrapped ETH. You can kind of see how I've diversified my risk into altcoins, some meme coins, even on base chain. This is a much more established meme coin compared to the Robinhood stuff. But this way, I'm not all in on I'm not APR chasing at the end of the day. I'm still coming at this with Agent Max's guidance to help me structure an LP portfolio that constantly pays me yield that I can live off of or compound into more investments that I want to hold going into this bull market. In the most wise way possible, at least based on the data that we have available to us currently with the market data, the price data, the pool data, all that factored in with different weights for each for each step of the process. And that's why I have this portfolio the way it is. And then this portfolio, I'll tell you what, these 97 positions, a lot of these are my test positions because Robinhood is so new. We don't have as much back testing data available to us on a blockchain that's 2 months old. And a lot of these assets only have price data that goes back 2 weeks, 4 weeks, 8 weeks. So we don't have the sophisticated backtesting systems on Robinhood Chain yet that we do on Base Chain, thanks to Agent Max, but we will soon. So that's why I have 97 positions that are all about $100 each. I am just harvesting data for different ranges, delays, assets, finding the staples that will go into Agent Max's Robinhood portfolio. Anyway, did that answer your question about what Agent Max is?
Yes.
Yeah,
Or that answered like how you use all the data. So I remember on Blockchain Pills video, you talked about Agent Max a bit more, and I think there's a token sale coming where people are going to be able to use Agent Max or like take advantage of Agent Max for themselves.
Well, yeah, the Agent Max is coming. We did a pre-sale just within our own community when we only had $1 million in TVL. So that was, we did $150,000 pre-sale, and there's going to be the bigger Agent Max. Well, that was a seed sale, pre-sale in like maybe 2 months. Once Agent Max launches, there's another product that's going to launch after that, and then we're going to launch Hype and Solana. After all that, we're going to launch Agent Max hopefully in 2 to 3 months, and it'll make this whole process also easier. The data will be right there. You can just do one click, boop, boop, in and out. And also we have a new system coming out soon where all you need is like literally USDC or USDG, and you can open positions. So we're about to simplify the whole game. So Agent Max is going to launch probably when we'll have, I don't know, 10, $20 million market cap. It's probably going to do incredibly well, and it's already going to be a revenue driving asset. It's already going to have revenues behind it because it's going to be getting part of the fees that are generated, that are built in for what we've already done here. So it's pretty cool.
Well, Agent Max looks like it'll be helpful because my one thought looking at all this is like, this looks pretty complicated. Like picking the different coins, picking
Yeah.
your delay. Do you want to auto compound? Do you want a wide range, tight range? Now, the bigger pairs like wrapped ETH and CBBTC, those are pretty straightforward, and you can probably, it's going to be hard to go wrong on those. But if you
Right.
want like this, and there's still some pretty good gains on those. So it seems like for beginners, you might pick some more basic pairs.
Yeah.
And then if you want to really try for the highest earnings, but takes more risk and puts more time into it, then you could go for those
Well said.
those tiny positions.
You nailed it. Yeah.
Well said. Yeah.
Or
Yeah.
the more advanced, like, I'm going to put this meme coin with gold or whatever,
Yeah. We haven't done a meme coin. We haven't done a meme coin with gold, but we're talking to some people who are trying to launch stuff. So it's kind of funny.
Like, we should launch a meme coin called Gold Bug and pair it with gold or something.
Yeah. Or like a meme coin with, like, you can call it what was the one that someone brought to us? They were going to do something like oil with USO, or Baron Trump. We're going to call it Baron because of Baron, oil Baron, oil Baron with USO, which is the oil ETF. So like, yeah, you could start doing really cool stuff.
Speaking of Trump, the DJT stock, I don't know anything about this, by the way. This is just based on the data and the numbers. DJT stock, I think it's Trump Media Organization, has been the craziest money printer, I think, in the whole stock book on Robinhood Chain that we have. I gotta share my screen one more time because if we paired that Baron Trump with USO, and then we also created a pool with Baron Trump and DJT, we could have a whole ecosystem going. But look at this.
Ridiculous, bro.
Jeez. Like, you've earned 32 and your position 67. That's amazing.
And that's basically exactly what I put into it.
Oh my God.
Actually, I think I put in less than this.
No, you put less because it was like $9 or $8 when you started this position, because I started one at the same time.
Yeah, I'm earning, what is that, almost like 3 or 4% per day.
Oh,
and over 13 days. So on a $67 position, it's probably a $60 position when it started, it's earned $32. And I've been collecting the fees and just selling this because I'm like, I don't even know what this stock is. I would never invest in this normally, but like the people in our community said, guys, I don't know why, but my DJT position just won't stop printing. And I'm like, all right, let me open up a whole bunch of positions on it. Like this one, same kind of deal. This one's twice as wide, and it's already earned $36 on like 100. Maybe this was like 110 when it started. 813% APR. This one is a 55% range. I just went super wide on it. 100 and probably 30, $40 when it started. It's like 150 now, and it's earned $35. And this is in 13 days. This is crazy. This was never, like, I've never seen anything like this. And I've been in DeFi for a long time and I'm a developer. I've been in the weeds on the blockchain stuff. I've never seen risk reward ratio of anything like holding a like this is a stock. It's probably not going to do anything too crazy. Not financial advice. Like I said, I don't know much about this stock, but like I'm probably going to ROI on this in a month. And at that point, I don't care if it's a stock or a meme coin. It's a free money printer for me at that point on house money. And there's nowhere else you could do this. Now, if you want to be super conservative, SPY/QQQ, like I've got a whole bunch of positions and money in SPY/QQQ with all sorts of tight ranges because SPY and QQQ are super correlated. They barely diverge. And it's basically the entire stock market paired with the entire stock market, and it moves pretty well together. On this 2% wide range, there have been 0 rebalances in the last 4 days, and I'm earning 18% on it. And this is a brand new market, so these rates will probably go up as there's more SPY and QQQ trading on the chain. But this way, I'm basically getting exposure to the entire stock market. This position will track the stock market up and down. And if SPY goes up on average yearly 10% over the course of, the last 40, 50 years, whatever it is, like I'm going to get that 10% plus whatever yield that I've earned compounded half back into it and half back into my wallet as SPY and QQQ, plus dividends on Robinhood stocks actually roll into the value of the underlying stock. SPY earns a 1% dividend, and how Robinhood does it is they self-accrue the dividend onto the value of the token you're holding. So the SPY and the QQQ will earn their dividends inside the liquidity pool because they are composable and it's brilliant how Robinhood did the dividends. So SGov, you like bonds? I love bonds. I got tons of SGov in the real world. This DeFi is not the real world, you guys. None of this makes sense. This is fantasy land, but like the money's hitting our bank account, so it's awesome. All right, SGov. All right, short-term ETF treasury bonds. Um, what is it doing? Like 4.5% dividends right now. So that 4.5% dividend every month when they do the payouts for the dividend goes into the SGov token itself in the underlying pool. So this is what I call a ratchet pool. It just ratchets up in value over time. SGov and USDG, they don't really move. SGov is basically pegged to $100. So, but you get the self-accruing dividend on it. So this pool will just kind of go up in value slowly over time while earning and compounding at an additional 12.4% rate. And I just don't know risk reward ratio of anything like this stuff anywhere. It's just unbelievable what we have available to us in 2026.
Well, thank you for showing us this. This is amazing. I don't usually see something in DeFi and be like, man, I should give that a try. But this, I'm like, this might be worth learning, signing up and giving this a test. It looks like you're just printing money.
It's crazy. The amount of money that our community is printing collectively, like Aaron said, like in the last 24 hours, $95,000.
Oh,
Our
so what I
community,
wanted to ask, how long do you think this is going to last? Like usually there's a sweet spot to get in before everybody figures something out. How much longer do you think like these kind of earnings are going to last before, they might
You
start to
know,
go down a bit on average, or so many people put so much TVL in
right.
that you get diluted?
Well, base chain and, Ethereum have been around for a long time and you can still get great rates. I mean, most of the money we have is on base. With ETH and BTC, people are earning between 35 and 60, 70%. I think my new sole ETH position I just made is like at 80%. So, like Alex said, like I've said before, there's only about really 10 or 20,000 people that are liquidity farming across the globe, and the market is in the billions of dollars worth of liquidity. So I don't really think that's we're even close. Number one. Number two, the amount of all of these stocks that are coming on chain and Robinhood Chain, number two, are bringing billions of dollars. Robinhood Chain is just got to like 600 million or 700 million dollars. It's going to become 5, 10, 20 billion dollar chain with all these stocks, maybe even higher. It's going to become probably the second largest chain within the next year or two. So all this money is still flooding in. We're nowhere close. I would
yeah.
say we're probably going to see great numbers for at least the next year, maybe a year and a half, and then we're in the middle of the bull run. I think we're going to go for the next 3 years, and then maybe when we go into crypto winter, maybe it slows down sometime in 2029. But with the calculations we made, all you need is a good 2 to 3 years of just compounding. You change your life. You'll turn 10,000 into 100,000, $150,000, depending on the pair you're in. So we have plenty of time. We're very early,
Yeah.
very early. So
I think we've got years,
years, about
like
years.
years before people really start flooding into this. And when that flood happens, like we think it's flooding into Robinhood Chain right now because it's the fastest growing blockchain ever. But that is crypto people already.
Yeah.
So it's just the existing capital that is already
Rotating.
here.
It's just rotating.
But what we're going to see as market makers is every year more and more people are going to come into crypto and start trading these assets on chain. Whether they realize it or not, a lot of this stuff will just be like part of their applications and daily lives. But like more people are going to come on chain and start buying and selling this stuff. They might not even become part of that 10 or 20,000 people that become market makers. So the amount of money that's going to come in that is going to be contributing to the volume and the swap fees that we earn is going to far outpace the amount of people that come in here to be liquidity providers like us. So I think this is actually going to keep ramping up for a couple years and then level out for a couple years and then slowly start getting a little bit diluted as everybody starts using this kind of thing to make extra money. And as tools like this become easier and more accessible. But right now, like we've got the best tool and we've got this amazing set of emerging markets between crypto and now tokenized stocks. So we are so early, you guys. And if you want to get in on this, check it out. Any basically any asset you think of, you could basically LP on it nowadays.
Hmm.
And you could do it in a completely hands-off, automated way that's super easy and the most capital efficient way possible on MaxFi and Snuggle. And we're going to try to make it even easier. And we're going to keep trying to educate people about how we're making a ton of money doing it, how our users are making a ton of money doing it. Because, like I said, we're so early that, like, the more, like, anybody out here who's not doing this, like, it changes lives. So, like, we're at the end of the day, we're a people business. And if we can help people make more money and make their lives easier, like, then we've done a good job. So that's what we're here to do is like, I want to help people make more money. Liquidity providing helped me through a tough time in my life. I went through a divorce a few years ago, lost a bunch of my assets,
Same
right?
here.
Hey, and I for a while during the whole legal proceedings and all that, everything was up in the air. I was living off of my income as a liquidity provider. And I was doing it the old fashioned way manually. I was very good at it, but like I was 10 hours a week, 20 hours a week, but I was able to survive. And now I'm back to thriving. I've rebuilt my portfolio and now I have options. Like maybe I don't need to work another software engineering job because I'm making just as much as a liquidity provider at this point. So I could kind of build the business that I've dreamt of, which is the business I know, which is liquidity provisioning and software engineering together to help people make more money, which is how Snuggle and MaxFi were born. So it really it changes lives out here, and at the end of the day, man, that just feels good.
Well, you got me wondering. I'm like, I have my ICP channel. It's easy to do content for there. Like, maybe I ought to get into liquidity providing and do a video every day on like liquidity providing because it's such a big opportunity and it's a significantly different audience, different approach than ICP. And yeah, I'd sure love to make like a few thousand a month liquidity providing myself. That would very much help me as a content creator. It's funny with as much as some of these are printing, you could actually afford to even borrow money. I mean, this obviously ladders the
Don't
risk
do
out.
it. I'm sorry. Not financial advice, but I always want to dissuade people from using leverage because liquidity provisioning, if you're just doing raw LP stuff, it's pretty forgiving. But as soon as leverage is involved, it could be very stressful. It could
Hmm.
keep you up at night. And if
Oh, I see what
something,
you're saying. It stresses you out because you have to pay the
yeah.
loan back. I see,
And then
but
you
I
have this
understand.
leverage hanging over you, you know?
But I understand what Jerry's saying too,
I
though.
already
Like,
have a couple 100,000 in loans, so
Oh,
oh,
if I could pull like 10, 20,000 more and throw it in liquidity, it's not a big
I see
deal.
what he's saying. He's like, I'm already stressed out and it's not making me any money.
yeah.
Let me go get 10 grand where I can turn that 10 grand into like, I don't know, $150, $200 a day conservatively. And I can pay my other loans and keep my life going. So I understand what he's saying. Everyone's situation is a little different, I
Everyone's
guess.
different. And if you're, it depends on the kind of loan you're getting because
Yeah.
where I come from in, let's say, the crypto space, where I've been teaching big portfolio strategies using borrowing and lending. I have very advanced strategies I've taught with this over years. And my students, the main mistakes they made was they would borrow against volatile assets like ETH or Solana or SUI, where a Trump tweet crashes the crypto market 30% overnight, and even if they thought their LTV was healthy, boom, they got some of
Yeah.
their tokens zapped. They got liquidated. So if you're using Bitcoin, it's a little less volatile. So I would always tell people if you're going to do it in the crypto space, borrow against your Bitcoin with a super low LTV of like 20%, 25%. Um, that's manageable and a little easier to sleep at night versus going 50% LTV against Ether Solana, where those can swing 30, 40% in a bad month. Um, so not financial advice, but just from experience and seeing people getting liquidated and being liquidated myself doing it in the past. That's that's all. But if you're already borrowing hundreds of thousands of dollars from your bank or something, I would say in that case, be very conservative with your LPs. Blue chips, Forex pairs like that USDG slash SGov or Euro C slash USDC, where the market's not going to dump on you, or even Bitcoin slash ETH. Like if you've got the wiggle room and the runway to wait out a dip and wait for the market to come back up, um, then you'll probably be okay as well. So anyway, that's just some general wisdom with leverage.
Well, thank you. I've yeah, I'm wondering what to do and how this could fit in. It seems like there could use more education around this also,
Oh
where
yeah, big
because
time.
there's a lot of things to learn, even as much as your system has simplified it. And you could there's a video every day that could be done on like hottest liquidity pools today or whatever. So
Yeah.
this has been awesome getting to know you two and showing me a side of crypto that I haven't paid much attention to for quite a while.
I just want to say to your audience, like I know you guys love Jerry. So if you want to help Jerry out and help build his bag, I will I will convince him to put a referral link to MaxFi in his video. And if you click that referral link and you make your deposit to try this out, 3% of all the fees that would have gone to our business will go to him. And that will quickly give him a really fun portfolio to share with you guys and to help learn together. And also, if you guys have friends and family, share your referral link with them as well. And that way, you will be earning extra that you can then play around with. So support Jerry, use his referral link. I highly encourage it.
Well, thank you. And it looks like you can start playing around with this for as little as $100
Yeah,
or
there's
even
a
less technically.
$50 minimum deposit
All right, so
to en
50.
to enable the auto rebalancing. You can deposit any amount, but for the auto rebalancing to kick on, your position needs to be over $50. So I generally say start, if you want to go with a smaller position, $70 to $100 kind of gives you wiggle room for the price to move up and down and keep the auto rebalancing going. And the $50 minimum is to make sure that like the fees that we earn from our performance fee on the business is enough to cover the gas costs for all of these rebalances, which our gas costs at this point are astronomical. It is just absurd because we have now thousands of users and tens of thousands of positions
Yeah.
that our system is automatically rebalancing thousands of positions a day. It's really pretty wild. So that's why we have the $50 minimum to enable the auto rebalancing to function.
So that seems like it's very accessible to try it out, test it out. I appreciate the referral link. And anything, we got an hour and 7 minutes recorded. Anything you want to wrap up with before we go here?
We're good, Jerry. I appreciate your time, and it's good to, as a fellow ICP, I cover it from time to time. I follow you quite a bit. It's just it's good to actually talk to you one on one.
It is, yes. And I appreciate you guys sponsoring this video. Is there the best places to go to get started is maxfi.tech? Would that be the place you'd encourage most people to go to
Yeah, and
begin with?
then there's the video. They can go to maxfi.tech and they can look at the videos. It goes to the YouTube channel, and there's a learn
Daily
section.
income machine video that I see on the homepage.
They can click on that, and then they can go to Passive Income Labs, which is the channel for MaxFi. If you go to the video, there's a video section all the way at the top, which has all of our videos listed.
Oh, nice. I see that.
With
Yeah, you
full
got
article
blockchain pill up
breakdowns.
there.
Yeah,
Yeah. We have a whole breakdown
You got a
of.
lot of content out here. This is good.
Oh yeah.
we're trying to teach.
Oh yeah. If you see the level of content, I mean, we have so many videos. If you go to that channel, Passive Income Labs, you click on it, you'll see tutorials, you'll see everything. I mean, we've been trying to teach people for the last 7 months, and as the situation changes, we keep it updated.
Yep.
Excellent. Well, thank you. This is an awesome video. And I hope everybody's enjoyed this. And go to maxfi.tech if you want to get started. And if you want to talk to me, be in the school community, message me, go to jerrybanfield.com. Thanks for watching. Thank you very much, Aaron and Alex.
Thank you,
Thanks, Jerry.
Jerry.